Welcome to Talk Tickers, where we're digging into Mind Technology's latest quarter. Now, this one is a real head-scratcher. On paper, the company absolutely crushed it, but the market? It reacted like it saw a ghost, sending the stock tumbling. So, let's solve this mystery. Why did such good news get such a bad reaction? Okay, just look at this disconnect. It's wild. On the left, you've got the results. An absolute monster of a beat. They earned 24 cents per share when the street was only looking for 4. And revenue? Up a huge 36%. I mean, you can't ask for much better than that. But then, look at the right side. The stock gets hammered, down almost 15% on a huge spike in volume. So what gives? Why did Wall Street see a home run quarter and decide to sell? That's what we're here to figure out.
All right, first up, let's get into the numbers that led to this beat and the bruising that followed.
So where did all that strong revenue come from? Well, here's the engine room of the company right now. The aftermarket business. A massive 68% of their revenue in the first half came from spares, repairs, and service. This is the good stuff, you know? It's the high-margin, reoccurring business that shows their products have a long life and customers are locked in. This is exactly the kind of quality revenue that investors should love.
And you don't have to take my word for it. The CEO, Rob Capps, said it himself. They sorted out the shipping delays from Q1 and flipped right back to being profitable. So this isn't just some accounting trick. It's a genuine operational turnaround. The company is executing really, really well. And yet, what was it? What was the one piece of data in this whole report that was so negative it managed to overshadow all of this good news? What spooked the market so badly?
And here it is, the smoking gun. It's all about the backlog. This number is the best guess we have for future revenue, and it just fell off a cliff. At the end of the first quarter, they had a really healthy $21 million in orders lined up. By the end of this quarter, it was down to just $12.8 million. For the market, this one chart basically screamed, sure, the past was great, but the future is suddenly looking very, very uncertain.
Okay, so let's unpack what management had to say about this, because their commentary on the backlog drop is really where things get, well, confusing. On the one hand, management came out swinging with a really bullish story. The CEO said, point blank, that they have about $10 million in orders that are imminent. He even used the phrase, highly confident. Now, if that comes through, it basically refills the backlog almost all the way back to where it was. That sounds pretty great, right? But, and this is a huge but, in the very same call, they fed the bears. They admitted that they're seeing customers slow down their decision-making for the next year, and they're blaming the shaky economy. This feels like it completely contradicts their confidence about those imminent orders. It paints a much foggier picture. So, the market was left with a choice. Do you believe the cold, hard, negative number that's on the books right now, that lower backlog, or do you trust a verbal promise about orders that might come in the future? Well, in this environment, investors did what they usually do. They sold the reality and completely ignored the promise. A bird in the hand, right? All right, moving on from the numbers, management also announced a few strategic moves they're making, kind of like setting up the chessboard for what comes next. They've made 3 big moves. First, they're expanding their facility in Huntsville, which gives them more room to build and repair things. Second, they've set up something called an at-the-market or ATM program. And third, they've given themselves the green light to buy back their own stock. Now, these aren't random. They all fit together into a broader strategy. So for anyone who's not familiar, what's an ATM program? Think of it like a capital faucet. It lets the company sell new shares directly into the market whenever they want at the going price. It's a really flexible, low-hassle way to raise money without having to do a big, dramatic stock offering. Now, you might be thinking, hold on, why set up a tool to sell shares and a tool to buy them back at the same time? Well, it all comes down to one word: flexibility. If a perfect acquisition target pops up, they can turn on the ATM faucet to raise cash for the deal. On the flip side, if they think the market is unfairly punishing the stock, say after a big drop like this one, they can use the buyback to swoop in and buy shares on the cheap. So let's put it all together. The great results, the scary backlog, the mixed messages, and these strategic chess moves. Here's our prediction for what happens next. For the next call, we're rating Mind Technologies a market perform. We think the stock is going to be stuck in a range for a little while, probably bouncing between that post-earnings low around $8 and the $10.50 level it was at before the report. The one and only thing that's going to break it out of that range? An announcement. A press release saying they've landed those big orders and the backlog is back up over $20 million. Until then, it's probably stuck in neutral. So a setup like this, where there's a lot of uncertainty, a ton of volatility, but also a pretty well-defined trading range, is actually perfect for a more creative strategy. So how would we play this? All right, here's what we call an outrageous but plausible trade. The idea is simple. We think the stock has found its bottom around $8, but it's not going anywhere special until that backlog gets fixed. So the strategy is to sell cash-secured puts with a strike price right around that $8 support level. Now, one of two things happens. Either the stock stays above $8 and you just get to keep the nice fat premium you collected from the high volatility, or the stock dips and you get assigned the shares, meaning you get to buy the stock at a net price even lower than the recent bottom. You either get paid to wait or you get to buy the stock at a fantastic price. Ultimately, the entire story for Mind Technologies boils down to one simple question. Can management make good on their promises and rebuild that backlog? The next few press releases are going to tell us everything we need to know. This is not financial advice.